Big M&A news continues, but it's all focused on battery materials. Welcome to Kitco Roundtable. I'm your host, Michael McCrae. Editor Neils Christensen is in. Hi, Niels.
Hey, everybody. Happy Friday.
Kitco correspondent Paul Harris. Hi, Paul.
Hello.
And talk about timing. We are with the proud CEO recently onlined a green copper mine. It's Stephen Twyerould of Excelsior Mining. Stephen, welcome to Kitco.
Yeah, look, great to be here. Thanks, Michael.
Stephen, tell us about your in situ operation in Arizona.
We're really excited about what we're doing down here in Arizona. We're building the most environmentally friendly copper mine that you can in the world today. So, you mentioned in situ. So the reason we're able to do this sort of environmentally friendly process is because we're using this novel in situ mining. It's not common in the copper space. It's quite common in the uranium space. And so we kind of just picked up that type of mining method. We put it over the top of our copper oxide deposit, because our deposit is quite unique and we're able to do that. So, what that means is that we just have injection and recovery wells and we circulate solution. We pump it off to a processing facility, generate pure copper cathode, and we're not digging the ground up, no waste dumps, our carbon footprint, our water use, it's all very low. So, that's the exciting part. And now we're all about sort of ramping that up to our nameplate production.
We want to talk more with you about jurisdiction. We want to talk about the EV space. We also want to talk about copper. But first, we start with Niels. Niels, help me out here. Is gold taking flight or isn't it?
You know what? Your guess is as good as mine at this point. We were set for a really good week. We probably could have closed above 1,800 today, but unfortunately, the U.S. economy decided to pick up steam. We had two better than expected reports this morning that really just hammered gold down. Like we were in striking distance of 1,800 and it just got slapped back down. So we had new home sales come out, over 1 million houses sold in March, the best sales record since 2006. And then before that, we had IHS Markets, their flash PMI index. It showed that sentiment in the manufacturing and the service sector are at record highs. How does gold compete when there's so much positive news in the marketplace?
Paul?
Well, I want to remind everybody of a comment, Ryan's number last week. He was talking about lumber and how lumber prices have gone off the roof. That's still the case. And I was reading up on that. And so the companies that build new homes, they're now including price escalation clauses in their contracts to cope with the rise in lumber prices. So, you're a new home buyer, you put your money down, but you may be paying a lot more for your home depending on what lumber is. So inflation's starting to happen in the supply chain. And it's not just lumber, it's going to be happening in other things as well. And so that's eventually going to come good for gold, isn't it?
So that was actually in the PMI report as well. Input costs for companies, fastest pace since July 2008, I do believe. I can't quite remember, but I'm pretty sure it was July 2008. Anyways, you're right. Inflation is picking up. And that's probably from, the people that I've talked to, this is probably the biggest saving grace for gold right now is this inflation pressure. And it's only going to get worse as the economy recovers. Think of how many people are sitting at home waiting to buy that new TV, that new computer, that new chair, couch, whatever. Maybe not putting a new deck on their house this year because of lumber prices. But there's a lot of pent up consumer demand right now. They've socked away all of their government money into savings, but at some point they're going to bring that out, and that's going to drive inflation. But yeah, to your point though, I read a report last week, just as we ended because I think it was something that Ryan mentioned. U.S. home builders said that because of lumber prices, the cost of construction for a new home is increasing at least $24,000 in the last year. That's just because of lumber prices. So inflation is here. Inflation is coming. Now, I think people are hesitant to jump into gold because of that, because we still don't know if it's sticky inflation or if it's transient. Like, the Fed has come out and said, yes, we're going to see higher inflation, but it's going to be transient. We're going to see the sugar rush from all this money. So stay calm, move forward, and inflation will be okay.
Well, I think that pent-up demand's there. Another sort of figure, news point I saw this week, the US savings rate is 33%, the highest it's ever been. People can't go out.
Wow, that's a good number. Are we just going to do number of the week right now? Is this?
Get that.
Gold's friend, Bitcoin, was also pulled back this week, Niels.
Yeah, well, Bitcoin fell below $50,000 a token. Not surprising though. We actually kind of saw the same kind of move when CME launched the first Bitcoin futures. And there was all this excitement leading up to it, and then the futures came out and it just crashed. And a lot of people are saying, it's the same thing. Last week we saw Coinbase. They launched their IPO, first publicly traded company in the crypto space. It's lot more excitement in the Bitcoin market, but the more exposure you have, the more it becomes a two-way street, and you can't get rid of the volatility with Bitcoin right now, and that's why I'd be hesitant to look at it as a safe haven asset compared to gold because of its volatility. Yes, the reasons people are buying Bitcoin are kind of the same as gold, but I don't know if I could stomach the volatility. One thing I would like to point out about Bitcoin, though, is that report came out. I got to cover it from coinpayments.com. They're the biggest merchant of transactions in the crypto space. And they just they noted explosive growth as Bitcoin as a form of payment and method of payment. And I think that's going to be interesting. How does this cryptocurrency grow as a global currency? And I think it's still out. The jury's still out on that.
A leading form of payment as long as you're not in Turkey. Sorry, Paul.
I was going to say, I've been watching some of the US news channels this week, and there was a big story, a big segment about digital currencies and how Bitcoin's just fallen 15%. And the analyst was talking about how that's fairly common. Bitcoin's gone through some very big swings. It's got a very high beta, and that in itself would probably prevent it from being a currency. But one thing that also struck me was with some of the other, there's a Bitcoin called Doggy, and everybody's calling it Doge, which I really didn't understand, given that the thing's got a picture of a dog on it. And it's obviously Doggy.
Are we gonna debate what color the dress is as well? Is that no? But this is it. Like that coin was made as a joke, and now it has a $50 billion market cap. The crypto space is just kind of insane, and it's a symptom of how much money is floating around in the marketplace. Like the central banks, governments have just flooded markets with all this liquidity, and it has to go somewhere. So why not buy the new thing, which I have no idea what it is. These non-fungible tokens. I guess they represent different things like artwork and stuff like that. But I mean, they're selling for literally millions and millions of dollars, and it's just I also don't understand how lumber can be $800 above its 5-year average. I don't know who would actually spend that money on lumber, or just I would just wait another year to build your deck. I don't know.
I've got some tulips for sale.
It's exactly like it's this euphoria that just doesn't make sense to me anymore right now. It's just, yeah.
Listen, we've got to get on to the other precious metal, which of course is copper. Well, we've got Stephen here, but quickly, Niels, before we move on, what did the weekly outlook say?
So last week, the gold survey showed analysts were 100% bullish on gold. They would have been right, except for today. But today now they're bullish and neutral. So 41% split tie between bullish and neutral. And I think that's just because gold wasn't able to surpass 1800. So, do we see some consolidation around these levels? Maybe, I don't know. A lot of people are saying we probably have to consolidate before we see a push above 1800.
Stephen, copper's been steady this week at around the 420 mark. Copper hit its 10-year peak in February and it pushed above 430 a pound. Of course, copper is being driven by the usual story around EVs, government infrastructure stimulus, as well as some catch up due to 2020 slowdowns. Now, I don't expect you to be a copper bear by any chance, Stephen. But I wanted you to look forward because I know that you look at this space a lot because it is your business. What is remarkable to you about the supply and demand picture going out for copper?
Yeah, I mean, I think it's all good for the short, medium, and long term. Obviously the short term is kind of driven a little bit by some restrictions in supply. COVID-related restrictions, and I don't think they're gone yet. I noticed that Peru and Chile are spiking a little bit recently in their COVID cases, so that can have another short-term impact on supply. But the demand cycle, mid-term, long-term, infrastructure spending, this sort of renewable energy EV revolution, in my view, that's inevitable. There's people talking about shifting sort of like EV vehicles taking up around 3% of the marketplace right now, expected to be around 15% of the marketplace, in 2025. That population growth, decarbonisation, all of that, I believe, bodes very well for copper, mid to long term.
We're going to get dangerously into your segment that we usually push to the end, but I have to bring it up because you mentioned as well too. With this price at, what price are people baking in for copper, and also does that mean that projects are getting dusted and then pulled off the shelf?
So look, I mean, a lot of people were running their numbers around sort of 250. Like long term, everyone's kind of been saying, if I sit at 250, I'm going to ride some up. Maybe I've got a little pressure down. These days we're all around sort of 325. The copper price is 430. So I think that's going to start shifting. It's time. You've got a particular mine and all that material that was low grade and uneconomic at, $2.75, $3. You can't bring that online instantly. It requires capital. It's going to take 4 or 5 years to bring some of that low grade in. So it's not like, people are running out there, flicking a switch and feeding additional copper into this price. There's a lag there for sure.
I just want to, from a curiosity, really, Stephen. In Chile, for example, the average mine grade is 0.6% copper. So calling stuff high grade and low grade seems a bit academic, doesn't it?
Well, I mean, it depends on how you're mining it. Our average grade is kind of like 0.3, but our cutoff grade is, sort of 0.05. So it depends on your cost of mining. Some of these really big mines have extremely low costs. They can mine down to 0.5%. You want to go underground, it gets expensive, so you got to run a grade around 1% copper. But what is really clear is that the grade of copper on all of these mines has been declining over the last 20 years, and that trend's going to continue.
Yeah, thank you.
We're going to leave the metal segment, but Niels, it would be a good moment to bring in some sad news. Peter Hugg passed this week. He was head of precious metals division at Kitco and a longtime contributor to Kitco Media through his numerous video appearances as well as print and conferences.
Yeah, so it was a tough week. There's a big hole left in the gold market. it's sad, but at the same time, we've gotten so many messages from people who have been impacted by Peter, through his, and I think he's as knowledgeable as he was in the marketplace. He's being remembered actually for his integrity and his honesty, his candor. He's not afraid to, if prices are declining, he's not afraid to be bearish. If prices are going up, he's not afraid to be bullish. And people just really appreciated that honest and straightforward outlook. And we could definitely use it right now with all of this uncertainty in the marketplace. So yeah, there's for me, he's leaving a big hole in the marketplace.
When I started with Kitco over 2 years ago, I remember one of my friends telling me, "Cool, you get to work with Peter." I always remember the big audience I got when I interviewed him. He had a lot of fans. I remember the kindness when he greeted me when I first started at Kitco, and just remember his keenness that he had for the sector and his ability to kind of share that enthusiasm. Our condolences to Peter's family, friends, and colleagues. Let's switch to junior news, but first, our sponsor. Revival Gold is a growth-focused gold and exploration and development company which is advancing its Bear Track Arnett Gold project in Idaho. Bear Track Arnett is the largest past-producing gold mine in the state, hosting a multi-million-ounce resource of gold. The project benefits from existing infrastructure, including roads, power lines, and an existing ADR processing facility. Preliminary plans are for a restart of the open pit heap leach operations, which will produce 72,000 ounces of gold per year. The all-in sustaining cost of gold will be $10.57 an ounce. The leach operation is to be followed by a second phase mill operation and a much larger scale of production. CEO is Hugh Agro, who has several years of executive experience with stints at Kinross, Placer Dome, and he was also a past Roundtable participant. And the company has a giveaway. The first 25 people that email info@revival-gold.com with map in the title and their mailing address will receive an Idaho mining property map. To learn more, visit Revival Gold, and we thank the team at Revival for its support. Paul, bringing you back in here again, what happened at the Marimaca Copper?
Well, yeah, let's stick with copper. In terms of exploration news, Marimaca Copper, which has an exploration project in northern Chile in the Antofagasta region, said it discovered a large-scale copper geochemical anomaly at the Orocobre target, which is about 3 kilometers from its Marimaca oxide deposit. High-grade rock chip samples there, up to 2.3% copper. The company plans to initiate drilling there before the end of the June quarter. And the company's stock prices, investors really seem to like that. The company's stock price has added a couple of dollars over the past few weeks, up to about $5.50 Canadian.
In my notes, you also mentioned Go Gold Resources extending its mineralization.
Yes, Go Gold Resources has the Los Ricos Norte project in Chihuahua in Mexico, and they've been stepping out drilling there. And at Casados, they've returned an intercept of 1.5 meters, grading 1,320 grams per ton silver equivalent, with a broader intercept of 16.8 meters, grading 306 grams per ton silver equivalent, which extended the mineralization there by more than 200 meters from previous drill results. And on the back of that, the company announced a $25 million Canadian bought deal financing.
Congrats to Stephen Twyerould. On Wednesday, his Mustango River Resources announced a strategic partnership with Kirkland Lake Gold, a top 10 precious metal miner. Kirkland Lake Gold will acquire 9.9% interest in Stewart's Ore Finders Resources and Mustango River Resources in exchange for $2.4 million. Kirkland Lake Gold can acquire up to 75% of Ore Finders' 3 main assets, contingent on $60 million spend on exploration and development. I like this story because it just kind of makes you aware of the vagaries of junior mining. In 2019, I remember, talking with Stewart, having a tussle with his board at the time, and then being able to rally with the new board. Let's skip to our next story, and I'm going to have Stephen in here because he's going to give me a hand with this. More large companies are tying up supplies of critical metals. On Monday, Australian rare earth company Hastings announced on Tuesday an offtake for its... I think it was... Sorry, which? Stephen?
Yangibani? It's called Yangibani.
I wouldn't have got close at all. It's Yangibani Rare Earth Project in Western Australia to ThyssenKrupp Materials trading GmbH. ThyssenKrupp, of course, is a large German multinational conglomerate with focus on industrial engineering. It has a market cap of $6.7 billion. The agreement could see Hastings send 70,000 tons of material to ThyssenKrupp over a 10-year period. I also will mention that rare earth producer Lynas said it achieved record selling prices for its rare earths in a recent quarter. So rare earths continue to do well. Paul, what was a PA that was released by Bunker Hill?
Yes, Bunker Hill Mining released a PEA, preliminary economic assessment, for the restart of their polymetallic underground Bunker Hill mine in the Silver Valley in Coeur d'Alene in Idaho in the USA. The company's looking at a 1,500 tons per day operation, which would produce 54.4 million pounds a year of zinc, 28.9 million pounds a year of lead, and 729,000 ounces a year of silver in a concentrate over a 10-year mine life, following a $42 million initial capital expenditure. The company says that will generate a 46.2% IRR. So looking very good there.
And Sierra Metals has $28 million to build a plant.
Yes, Sierra Metals is a company with operations in Peru and Mexico, and they're going to invest $28 million US to build a magnetite processing plant to produce about 500,000 tons a year of iron ore fines in concentrate, produce a 62% concentrate from its Bolivar mine in Chihuahua in Mexico. The company is obviously looking to take advantage of high and growing iron ore prices. Construction there is due to begin in June. Sierra aims to generate increased sales revenue while reducing the tailings portion for disposition, which will reduce their future closing costs as well. And it will also reduce their haulage costs, their copper concentrate.
We always have a story about something that's happening within renewables and ESG every week. And it was Earth Day did happen this past week. Paul, Torex Gold is building a solar plant.
Yeah, Torex Gold is quite an innovative company in many, many ways. And this week they announced that it entered into a commercial lease agreement to build an 8.5 megawatt solar photovoltaic plant at its Morelos property in Guerrero in Mexico. And with that, it aims to reduce its Scope 2 greenhouse gas emissions by up to 8.6%. The Morelos property hosts its El Limon Guajes mine and the Media Luna project. The company estimates that the project will reduce its energy costs from 11 cents per kilowatt hour down to an estimated 7.8 cents per kilowatt hour, and that should save it about $1 million per year in energy costs.
Paul, hold it. I think Niels has a silver question.
I just want to say go silver.
Silver miners have been uptaking about the use of silver in solar panels, and we're certainly seeing a large penetration of solar into the industry. We're going to be speaking with We're going to be sticking with the developers. Deep Sea Mining made a lot of news in March. DeepGreen, recently renamed the Metals Company, went public with a $2.9 billion SPAC deal. The company has $500 million in funding to push through small-scale production planned for mid-decade. My interview with the CEO, Gerard Barron, is going to run this Sunday. The metals company is targeting polymetallic nodules sitting at the top of the ocean floor at depths of 4,000 to 5,000 meters. The area where the nodules are found is in the Clarion-Clipperton Zone. That is an area in the Pacific between Mexico and Hawaii. The metals company said that a UN authority has granted it a license to operate. Nodules contain 1.1% copper. We were talking about grades previously, 1.4% nickel, 0.01% cobalt, and 31% manganese. So imagine around river rocks that are about 1 to 20 centimeters in diameter. Paul.
Yes, seafloor mining, there's a lot of potential there, but there's just so many questions around it. One being, how do you do the environmental assessment? Or, there's so much of that science has hasn't been proved. And there's not a huge body of science behind that because effectively you're taking off the top layer of the seafloor of the area where the nodules are. And it hasn't really been well understood what the potential long-term impacts of that could be. And so there's a lot of resistance to that. Another aspect to it is under UNCLOS, which is the UN law of the sea, which set up the marine authority that's going to regulate the potential for seafloor mining. Some of the stipulations of that convention is that it's got to, anything that happens has to be for the benefit of all mankind. So there's questions about whether a private company is operating for the benefit of all mankind, and also that no state is allowed to appropriate the seafloor. And so, on what basis would any seafloor production be taxed? Who would receive that tax? There's a lot of unanswered questions there.
I know DeepGreen would say, and then I think I can answer some of your points. There has been a UN body that they have been working through in terms of like jurisdiction and then setting laws on this. And DeepGreen has been working to that. And then I believe that they have been getting some of their permissions, or at least there has been some legal framework that they're working on that has been ongoing for about the past decade. Those are the criticisms just regarding how unknown the impacts can be, talking about your environmental impacts. And then obviously that was the other piece of news that came out for DeepGreen. World Wide Fund had the signups of the companies, and then that was Samsung, Google, and I believe that there was some car makers just asking for a moratorium on this until that there was more study to be done. And I think that, there's the S&P piece that also kind of was saying the same thing. You're talking about considerable depths down here where you're actually recovering these nodules. And so at that point, it's just a real mystery in terms of what the impacts are going to be. But I will say on the one thing that, it could very well, and what it probably is very well just kind of a desert in a way, or it could be very just like an area that is just not largely impacted just because given kind of the depths and just the expanse that is there. The other thing that DeepGreen will say, and it's unfortunately, it seems to be throwing mining under the bus when it's making its points, but the nickel production that is happening right now is happening in Southeast Asia because that's where it recognizes where the resources are. And then developing those nickel projects, those nickel mines and those companies are just really problematic. They're very energy intensive. You're dealing in an area with problematic regulatory environments, high density of population, potentially high rainfall, certainly a high earthquake area, and then you're going to be building tailings into that. So it can be, comparing or putting the two together, you're putting together an unknown, but you're also in ways that you're putting something against something that is very problematic in terms of getting that nickel that people want.
Yeah, I mean, a couple of comebacks to that. Just because it may not be good in Indonesia doesn't mean that it's going to be good in the sort of Clipperton, Clarion Trench. And it just hasn't been the research done at the depths of the ocean to see what life is there, is not there. And even if there isn't a great deal of life in the area of the nodules, the extraction process will generate a lot of sediment and putting that into the water column, which could be suspended there for a huge amount of time. So I think the calls for a moratorium to do more research, there's a lot of validity to that.
DeepGreen would say that it would also be that you are going to be building these new nickel mines that are in places that definitely do have life and forestry and vegetation that are there.
True.
Yeah. Stephen, you're somebody that's built a mine here. I was kind of interested in how you looked at this.
Yeah, I mean, I think Paul makes some really good points because, there is a certain amount of unknown there. And, we've done something a little different in Arizona here. And, there's certainly environmental advantages to what we're doing. But nonetheless, you can have activism and NGOs that that can challenge a project, and I haven't seen them come out on DeepGreen. I think you can put a regulatory framework together. You can get a permit, you can do this type of thing, but you can still be 10, 15 years away, from getting the sort of social license, if you like, to operate a project. And I think there's an unknown there, irrespective of, the studies that may have been done, or the so-called approvals that they have on their exploration licenses. I mean, that said, whether it's now or whether it's sometime in the future, if you take it 10, 20, 30, 50, 100 years in the future, you're going to need access to, to some of these commodities as the population grows. It's just a matter of time, whether it's the right time now or whether it's just going to take a lot longer. I'm not sure.
Niels?
Well, actually, that's the question I really wanted to ask you, Stephen. Everybody sort of knows that ESG is becoming very important. You're that's the foundation of your company. But I'm just sort of wondering, ESG versus access to these metals. I mean, people are still going to want cell phones. They're going to want, iPads and laptops and self-driving cars and rocket ships. So what wins out, do you think? Like, can these two be paired together? Like, do they match?
You can, but it's going to take some innovation, and it's going to take some time. We're doing this in situ project. I'm not harping on that, but there's a massive amount of research going on in Australia. You've got some of the big companies around the globe working on that with various institutions, and they're looking 20, 30 years in front of us, and they're looking at how can I mine a deep deposit using drill holes so I don't have to dig a hole, because that gets my cost down and reduces my environmental impact. And even if it's a sulfide, how do I access that sulfide through drill holes, and how can I dissolve that and bring it off to a plant or what have you? So, I know the big guys are looking 20 years out in front. And so I think, it's early days for some things, like putting in the solar panels. That's happening a lot in a lot of the mines in Arizona here, where we've got so much sunshine. Greatly reduces or neutralizes the carbon footprint, and that goes a long way. But that sort of fundamental transformation that DeepGreen, are reporting to be doing, I think that's years away, really.
Well, yeah, I mean, for me, one of the overarching concerns is that a lot of the science that does exist has been done by them. So, they're talking their own book about how perhaps their project should be regulated from an environmental point of view. The Seabed Authority is not an environmental regulator, so who is really going to undertake the environmental analysis, review, and regulation there? Again, more questions than answers, perhaps.
Yeah, and it's like you've got projects in reasonably good jurisdictions today that have very clear regulations, and they're still held up for 5, 10, 15 years. Let alone something that doesn't have that regulatory framework that you talk about. So I like the idea. I think it's interesting, but there's a lot of work to be done on it, I think.
I think there's some overhang from the past experience with Nautilus Minerals. That was the company also that was trying to do seabed mining all through kind of the last decade. It went bankrupt in 2019. It was doing its work closer to countries, or I should say island countries, in the South Pacific, which it was getting hit by issues around social license. So it was making it difficult for them to operate. I'd like to move to miners, and then before that we bring in Stephen. I did mention at the top, it was a big deal, and that was lithium miners Orocobre and Galaxy Resources merging to create the world's 5th largest global lithium chemicals company. The company said that the merger consolidates the group's positions in Argentina. The deal was valued at 4 billion Australian. There have been a string of M&As in the EV space. We just mentioned the big financing, not an M&A, but we mentioned the big financing at DeepGreen, the metals company. There's also been Pilbara Minerals, which finalized this Altura Lithium deal in January. That was for $201 million. And we have to mention that Alamos Gold filed a $1 billion claim against the Turkish government. The dispute revolves its failure to renew its mining license for the Karazli gold mine despite having met all of the legal regulatory requirements for the renewal. And that comes from Alamos Gold. Alamos says it has invested over $250 million into Turkey. And in its news release, it says it's regretful that it has to actually file this claim. And the claim is being filed under the Netherlands-Turkey bilateral investment treaty. And I think that would be a good piece to bring in Stephen. Let's talk about jurisdictional risk. You say that you are based in Arizona on an EV space. It seems like it's very, how would you say? It's I hear frequently from other people, jurisdiction matters in terms of actually being close in North America markets, being close to European markets. I remember this was something that was done around the Sibanye-Stillwater deal, and it's why Neil Froneman liked being able to do a tie-up with a company that was up in the Scandinavias. But I was going to ask you, is this kind of the same that occurs with copper?
Yeah, I mean, jurisdiction, I think, always matters. Even at a high level, if you're just looking at the sovereign risk, political risk, security risk. So, I mean, there's a lot of countries around where you've got to take a lot of consideration on those issues before you start developing or putting a lot of money into a project. Specifically around copper. I think if you link that to the ESG side of the equation, there are downstream users of copper who are looking to access their raw materials or their products from environmentally and socially acceptable sources, and so typically places that are in really good jurisdictions like Arizona, there's that regulatory framework that's in place that pretty much guarantees the product that for example we produce is at the highest standards of the ESG scale, and there's a lot of people talking about that product's going to create a premium. So, I know some people are exploring that. As we expand, we'll be exploring that. But I think there's a future in that as well.
We do have a new jurisdiction in the U.S., the Biden administration. There's been a struggle with the Australian miner to get its copper mine built in the state. Do you see any changes, or are there any worries with the new administration in the U.S., Stephen?
Well, I mean, the new administration, obviously for copper, it's good in so much as they're talking about the American Jobs Plan. They're talking about lots of adaptation of the EV market, renewable energy, decarbonisation, transitioning to a more renewable energy source. All of that spells very well for copper. On the flip side, I think that the new administration, there's a disconnect there between, on one side, wanting the product and wanting the renewable energy and wanting the transition to the EV space, and there seems to be a lag in the permitting of some of the key copper projects, certainly here in Arizona. So there's a disconnect there for sure, and I don't know how that's going to be resolved. I hope it does get resolved soon.
You're running an in-situ mine. You are talking about it's a green operation that you have there. Now, Paul has always been excellent this on every week talking, and we just talked about the example with Torex Gold. The retrofitting of these, making them more renewable, making them more carbon neutral. You've just built a mine, but I'd just also be interested in your own experience. Like, how green can you make a mine? How much can you actually take down the carbon footprint? And, is this something that's even possible within older mines?
Yeah, I mean, in the older mines, it's really about bringing in renewable energy. Solar and or wind, both are happening here in Arizona. They've got a lot of, typically the mining companies have got quite a lot of real estate where they can put this infrastructure in place. I know even that some of them are putting them on top of, old waste dumps that they've rehabilitated, which I think is a great idea. So, I mean, and that can have a huge impact on the carbon footprint. I think, we also have to focus as an industry on water use, water consumption. Maybe less so in other places, but obviously in the desert here, it's a precious commodity. So to the extent that, you can adapt new technology or adapt new ways or put in water treatment facilities to reduce your overall water consumption, that goes a very long way towards a greener mine, if you like.
I know in climate studies that's been recognized as the big risk, especially for those large copper mines that are down in South America. Just the lack of particular water. You did mention it, and it's an in situ mine. Was the operation particularly water intensive? Is it something you have to manage with an in situ?
So with in situ, we're using sort of 70 to 80% less water than a traditional mine. Our carbon footprint is probably 80% less than a traditional mine. I think for in situ, the real gain here is in your post mine remediation. When we're finished, the mine itself, the surface, you won't even know there's no open pit or dump or any sort of sterilized real estate, if you like. You can go out and build a house or a farm or whatever. And that's a tremendous sort of biggest benefit I see, frankly, in being able to use the ground when you're finished for future use.
Niels.
I guess one of the things that I want to ask, I mean, everybody sort of talks about carbon footprint and all this stuff, but really it comes down to finances. It's now financially, it makes sense to go to use solar energy, to use wind energy. I'm sort of wondering though, like, is there any financial incentives for reducing water? Like, I don't really hear that as big projects, like for mining companies. It's all about solar power. We're reducing costs by having solar panels and stuff like that. And I feel like we're not going to address some of the real issues like water usage until it becomes until there's a financial incentive. And I'm sort of wondering, is there anything there?
Well, it is there already, I think, Niels, because depending on your location, the amount of water you potentially consume will play a large factor on whether you get permitted for water use or not. And if you're not permitted for water, you haven't got any economics at all. So this is one of the big drivers in terms of going to dry stack tailing filter press to get the water out to recycle it. The average mine in Chile, I think, recycles 85-90% of the water, and every drop is used sort of 13 times before it's lost to the environment. So the miners and technology companies are putting huge investment into this to reduce their water footprint, because there's a very real cost involved. And again, depending on your location, if you're in Chile and you've got to use seawater, the cost of that seawater desalination plant and then pumping it up several hundred kilometers to 4,000-5,000 meters of above sea level is huge. So any way you can improve and be more efficient in water use, there's real bottom line dollars
there. Yeah, that's correct.
I can't remember who the miner that said it, but he said they're not mining; they're actually just running large hydro projects.
Yeah.
Stephen, last question. We're really at a how would you say crossroads in this mining business, just with the looking off of the takeoff of EV, everything that's happening in ESG. You have this mine under your belt that you've built. If you're starting out now, what would you focus on in mining? Where would you direct a young person?
Some of the points we've already touched on. It's jurisdiction. It does matter, because ultimately, if you're going to build a mine, you're going to need capital, and people have to be confident in investing that capital in the location wherever you are. I think ESG. It's not just access to capital. It's how you run your business, and we're all shifting that way. And so, to the extent that you can find a good jurisdiction, certainly look at copper or battery metals or renewable energy or EV related metals, because I think they've got a very long-term future. And if you can do that more environmentally friendly than your competitor, then you're going to attract the finance to get that thing moving. So I think those three things I'd focus on.
Paul?
And I think you forgot to mention, Stephen. I'd recommend that people listen to the Kitco Roundtable podcast, because all sorts of ideas and the industry trends are going to be brought to your attention.
Yeah.
Let's turn to the number of the week. Stephen, we always start with a guest. Stephen, what's your number of the week?
2 billion. 2 billion. It's a growth number. Like in 30 years, the population of the planet is supposed to grow by about 2 billion people. That's only 30 years away. So you can talk about a lot of things, but people consume. There's 2 billion more people on the planet. When we welcome all those people onto this globe, that's going to drive the renewable energy cycle as much as anything. It has to. And renewable energy, EV, we keep coming back to the copper story. But that's my number, 2 billion.
Thank you, Stephen. Niels?
Mine's really boring, guys. I'm sorry, but it's 1,800. That's the price that gold has to get above if we want any sort of momentum in the marketplace. And I just... I don't think after the rejection today, I think we're going to be waiting a little bit longer before we see that line crossed.
Paul, what's your number?
Okay, well, I'm going to stick on the renewables side of things, and bearing in mind that yesterday was Earth Day, my number's from perhaps the most important announcement made yesterday. And so my number is between 50 and 52%. And that's what US President Joe Biden said his administration's aim is for CO2 reductions by 2030, 50 and 52%, based on 2005 levels, which will set the nation on a path to net zero emissions by 2050. A very different approach, message compared to his predecessor.
My number of the week is 37%. That's 37%. Swiss watch exports were up 37% in March compared to the same month in 2020. That, according to a report by the Federation of the Swiss Watch Industry. According to BMO Capital Markets research, that points to a healthier demand, and this should help you out there, Niels, healthier demand for precious metals as well as jewelry and diamonds. Diamonds can always use a hand. That's it for us. Stephen, what's the next 12 months look like at Excelsior?
Oh, it's all about the ramp up. The in situ mining process. We've got a lot to learn. The guys are doing a fantastic job, but it's all about optimizing that well field, optimizing the flow, optimizing the copper coming out of that thing, and just pushing on with that ramp up as best we can.
Niels.
Stephen, just before we go, I wanted to ask. I mean, obviously, you're using you're adapting technology from the uranium market into copper. You mentioned this. Like, is there any technology on the horizon that will help us protect the environment and still meet this the insatiable demand that you see coming? Like, is there anything that you're watching?
Yeah, I don't think. I mean, obviously, I think in situ is huge, and if they can, if in I don't know what it is, 10 or 20 years, instead of going underground or even open pit, mine this thing, with in situ, and it could be any commodity, and it could be oxide or sulfide. That's the goal. I think we're a long way from that, but there really is, tens of millions of dollars in research going into that right now. I can see that. Like, otherwise, it's incremental. It's things like the dry stack tailings. It's things like solar panels. It's things like mine design. If we can get smarter with our mine design, use artificial intelligence to assist in how we mine things, then we're going to move less waste, dig smaller holes for the same amount of product. And I think we can do that too. Yeah.
Reach out to us. You can follow me on Twitter at Michael McCrae. That's Michael McCrae. McCrae is with 2 C's. Niels is at Niels_C. Paul is at P Harris1313. And Stephen, is there any way that people can get a hold of you?
Yeah, I mean, you should go to our website, excelsiormining.com. There's a ton of information there. There's videos. There's all sorts of technical financial data. have a look at the contact page, get in contact with us. We'd be more than happy to hear from you and respond for sure.
If you like what you hear, please tell a friend and don't forget to subscribe through iTunes. And always, if you have suggestions about the show on what you want to hear, please reach out and let us know. Stephen, it's been a pleasure.
Yeah, it's been fantastic. Good discussions.
You've been listening to Kitco Roundtable. I'm your host, Michael McCrae, on behalf of Paul Harris and Neils Christensen and Stephen Twyerould. Have a pleasant weekend.